Welcome to another edition of Zacks Rank Buy. I am Brian Boland. I'm the aggressive growth stock strategist here at Zacks. And today is March 17th, better known as St. Patrick's Day, which is why I'm dressed so festively. And, you know, like any real Irishman, I decided it's time to talk my own book about being Irish. So I did a quick search for stocks that have a little Irish roots to them, a little Irish background to them. And I was able to find a couple good ones. So let's go ahead and take a look at what I found. Oh, look at this. It's Johnson Controls. Now, I'm going to preface this because AI told me that these stocks had something Irish to do with them. You know, as I am a consummate professional, I didn't do any other background search besides that. All right, JCI is the ticker. It's a Zacks rank number 2. That's a buy. A C for growth and a D for value. Now, I need a little papal dispensation today. That's when the Pope forgives you of your curses, of your sins. And normally we look for a stock that's got a very strong growth style score and a weak value style score. But Johnson Controls, I am told, is an Irish domiciled company focused on smart buildings and sustainable solutions, whatever that means. It started off as Johnson Electric Service, global fire protection. Headquartered in Ireland. Look at that. It says it's headquartered in Ireland right there. Now, my grandparents were from Ireland, and I heard their bro growing up. So don't think now I'm making fun. I'm just reliving some of my youth with me grandparents. All right. Johnson Controls, building products, wood, fire control. There we go. Let's look at the numbers we always love to see. All right. We've got 4 straight beats of the Zacks consensus estimate. Nice small beats. Definitely some seasonality here in their numbers, but this is a mature business, so you can't really expect too much. Okay, why is X rank number 2? So we see estimates for this quarter going from $1.04 to $1.11. That's great. $1.26 to $1.28 for next quarter. For the full fiscal year of 2026, they're a September year, so we see $4.59 up to $4.72. That's outstanding. Look at this next year, next fiscal year, reaching into 2027. $5.29 up to $5.49. There's good earnings growth here. There's good earnings growth. All right, let's cheat. Now, normally I want to see a big revenue growth, and I'm not gonna be too upset about this. I mean, we're talking about a $25 billion in sales for this year, and we see 6% growth. That's nice. Next year, 5.82% growth, getting up to $26 billion in sales. So, I mean, there is kind of, sales growth here. I like it. And, a stable, mature business. Let's check out our valuation to round it out. Well, for small growth, we're paying a lot of money. We're paying 28 times forward earnings when you're only getting 6.8% growth. That's not the greatest. Price to book at 6 times is pretty expensive. The value people don't like that. Price to sales 3.3 times. And we see margins kind of stuck in the 10s. But today is a special day because Johnson Controls is based in Ireland. And boy, if you bought this thing 2 years ago, you'd be looking at a lot of green. Look at that. That's a nice move higher. Valuation's a little stiff. And we can see just a little bit ago it was even stiffer. It was a good stiff drink, I guess, back a couple weeks ago, when it was 145 or so. It's trailed in now. I see it here at 131. It's Johnson Controls International, and the international part is that it's from Ireland, part of my heritage. All right, let's go on to the next one. This is Adient. That's how we'd say it. That's how my grandparents would say it, Adient. Maybe that's how everyone would say it. I don't know. ADNT is the ticker. It's a Zacks rank 3. Some more papal dispensation here. We like to do 1s and 2s. But we do have a good growth score, and we got a good value score. So that's odd for this. So this is a full Irish day now. So Adient, automotive equipment. Now, let me tell you, it's an Irish domiciled global leader in automotive seating systems. They're going to put you in your seat. All right, so it's $1.5 billion, and boy, this stock beat in February, popped up to 27, it's down below where they just reported. Is it below 20? No, it's right at 20. It's up a little bit today. Look at this, March 17th. Green, green, glorious green. It's the loveliest color that I've ever seen. All right. Enough with the Irish stuff, right? It's getting old. All right. We've got 2 beats. They're nice and green. 2 misses. but the beats are big, the misses are small, if there's a takeaway there. But I don't like this kind of downward trajectory. Maybe that's a seasonality. I don't know. They're buying more cars. Are you buying more cars in the first quarter than any other time? Maybe they're getting more orders. I don't know. I can't say for sure, but let's just go ahead. Why is this the rank that it is? Okay, well, estimates really tumbled here for this first quarter, 60 cents and down to 38 cents. So we're going to give that the down arrow. 53 cents to 63 cents the next quarter. So that could just be a shift of a dime, but it's more than a dime, obviously. All right, for the full fiscal year, $1.92 up to $2.08. That's what we like. The Zacks rank cares more about the annual estimates than it does the quarterlies. And we can see next year, $3.08 to $3.17. What are the odds? Tim Tebow himself in $3.14. $3.17, of course, is today's date, March 17th, St. Patrick's Day. All right. How about our sales growth? What are we doing? This thing got an A for growth. And the other stock didn't have it. Had a C for growth, but it had better growth. We got to hit the reset button on the style score. So flat this year, slightly up next year for growth. So not a huge growth story. So we really need a good valuation. We really need it, and we kind of get it. The most recent quarter, if we had 4% top line growth, and we're paying 9.5 times. But of course, that stock has really come in. Value players stand up and appreciate this. Under 1 times book. That means we're getting this stock at a discount of 24% to the assets on the books, the things that they own. So, boy, value investors should like this. And these are good margins for, in the automotive industry. You're selling seats. I'm not that big of a car guy. I don't know how much technology or stuff that's in seats, but you're getting great margins. If you know what, I'm a dummy. That's book value. Here's their margins. That's what I was thinking. I was thought, my God, that would be way too strong of margins. You only got 1% margin on making a seat, so that's low. So that's hard. So if they can increase that margin, they increase their operational efficiency, things could get a lot better. But boy, things have been tough in the auto world for a while. We just see a series of slopes down, and this one's coming in big. I'm seeing a lot of stories around, and these are just stories, they're anecdotal, that there's a lot of car inventory out there. I haven't done enough work to know if that's true or not, but I'm going to pass it along as if it were, sort of. All right, ADNT, that's Adient. I don't know how you say it, but that's how I'm saying it. And that is it for this week. St. Patrick's Day, make sure you go to Mass. Make sure you wear some green. You can try a green beer, but don't go overboard now. Don't go overboard today. The cops are out looking for you. All right. That's it for this week. Be sure to join me next time when I'm a little less Irish. We'll be looking at 2 more stocks for your aggressive growth radar. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions. Happy St. Patrick's Day, everybody.